Ahead and take on the next chapter. The chapter head is process costing and operation costing. Not operating, it is operation costing. Now, this particular chapter, there are two types of examples. One is where you do not have a work in progress inventory. And then number two, where you have work in progress inventory. Is that fine?
Yes, sir.
So now we're going to take up 4 to 5 examples on process costing, where the company does not have any work in progress inventory. Now let's go ahead and take on this example. And this particular chapter will follow a format. Okay. And once you get these steps, what I'm going to discuss now, you can never go wrong in a sum on process costing. So let's go ahead and take on this example. Yes, Renuka.
Yes, sir. So that second
question.
Yeah. A chemical compound is made by raw material being processed through two processes.
You saw that? The product has to, the material has to go through two processes before you get your finished product. Then
the output of process A is passed to process B, where further material is added to the mix.
Very clear. The output of process A, that is process 1, will become input for process B, where you're going to add further materials to get your finished product at the end of process B. Two processes, process A and process B. Next.
The details of the process cost for the financial period 10 were as shown below.
So don't bother a period 10, it's for a particular quarter, particular week. Okay. They're given the period number.
Yeah.
Then
direct material for process A 2000 kilograms at rupees 5 per kilogram.
You saw in process A, we introduce 2000 kilograms of raw material at rupees 5 per kilogram in process A. Then process B.
No, can I give you the labor?
You want to finish process A?
Process A direct labor is 7,200 rupees and process plant time is 140 hours at rupees 60 per hour.
And all these are expenses given for process A. How much in raw material? It is 2000 kilograms at rupees 10,000 rupees. Rupees 7,200 in direct labor cost. And then you have your plant overheads, the factory overheads, right? The cost of running the machine. It is how many hours?
140
It is 140 plant time machine hours at rupees 60 per hour to run the machine. The cost is 8,400. All these are expenses incurred in process A.
Process B. Direct material 1400 kilograms at rupees 12 per kilogram.
That's why they said no, whatever the process A output becomes input for process B, and also you want to add further material. How many kilograms further? 1400 kilograms at rupees 12. Rupees 12 per kilogram. Direct labor
4,200 rupees.
Rupees 4,200. What about the process plant time?
80 hours at rupees 72.5 per hour.
Per hour of running the plant. Then
the departmental overhead for period 10 was 6,840 and is absorbed in the cost of each process on direct labor cost.
You know what is the meaning? The 6,840 is for the department as a whole. In that department, you are carrying out the two processes, A and B. So you can either do this. The meaning of that sentence is, it's given that the overheads are 6,840 and they are absorbed based on direct wages or direct labor cost. Yeah. What is the meaning? It is 7,200 is the wages for process A and 4,200 process B. If we add both, it will be 11,400. Now guys, take a calculator and do this. 6,840 rupees overheads for the department. divided by the wages is 11,400 for the department into 100 will work out as 60%. That means you can say that the overheads are absorbed at the rate of 60% of direct labor cost or direct wages. If you want to find the overheads for process A, you can apply 60% on 7,200. And then for B, 60% on 4,200. Is that fine? That is the meaning. Just read the sentence once again. The departmental overheads are 6,840.
And is absorbed in the cost of each process on direct labor cost.
Based on direct wages. That means what? They're suggesting that these factory overheads are absorbed as a percentage of direct wages. That's what they meant. And we have done lot of sums in the chapter cost sheet as well, right?
Yes.
Next.
Expected output was for process A 80% of the input and for process B 90% of the input.
You know what is the meaning? They given the normal yield is 80% of input. Example, process A, we're going to put 2,000 kilograms into the process, right? Out of 2,000 kilograms, 20% is normal loss. That's the meaning. Only 80% is expected. What is 2,000 kilograms into 80 by 100? Is 1,600 kilograms is a expected output from process A. That means the expected loss is 400 kilograms. How I got that? 2,000 kilograms input into 20%. Is that fine?
Yes, sir.
So expected output is 1,600 kilograms in process A. And then read further.
The expected output in process B 90% of the
90%, I'll discuss that later. Next.
Their actual output was 1,400 kilograms in process A and 2,620 kilograms in process B.
You saw that you expected 1,600 kg from process A, but how much you got?
1,400.
That means 200 kilograms is an unexpected loss. You lost extra. That is an abnormal loss or unexpected loss, a loss which could have been avoided. Yes or no?
Yes.
Now people ask, sir, why didn't you discuss expected output for process B? Now I'll discuss. Now tell me, what is the actual output out of process A?
1,400 kilograms.
Then go back to the initial data. How many kilograms are introduced into process B directly?
1,400.
Add both. 1,400 coming from process
A.
into process B. Another 1,400 is introduced in process B. In all, 2,800 is a total kilograms processed. Now tell me, what is that into 90 by 100? 2,800 kilograms into 90 by 100
720 kilograms.
will be
sorry.
Will be 2,000
520 kilograms.
520 kilograms is your expected output. But what is the actual output given? 2,620. 20. That means you got 100 extra. That means you lost less than what you expected.
Yeah.
That means there's an abnormal gain. You are supposed to get 2,520 kilograms of output, but you received 2,620 kgs from the process. You got 100 kilograms more than what you expected. Understood?
Yes.
That is an abnormal gain. Got it? Next.
So assume no finished stock at the beginning of the period and no work in progress at either the beginning or at the end of the period.
Very good. No finished goods, no work in progress. And one more thing, it's a coincidence. The actual output coming from process A is 1,400 and also materials added in process B directly is 1,400. You know, it's like this. There are people coming from foundation into inter, plus there are some direct entry students into inter directly. They don't come from process A, from foundation. Is that fine? Next.
Normal loss is a contaminated material which is sold as a scrap for rupee 0.5 per kg from process A and rupees 1.825 per kg from process B, for both of which immediate payment is received.
You saw there is a market for the normal loss units. Not normal loss, you can say for the scrapped unit. That's the meaning.
Yeah.
You have a market for the scrap. The scrap arising in process A can be sold at 0.5 per kg, and process B scrap can be sold at rupee 1.825 per kg, right? Next.
You are required to prepare the accounts for the period 10 for number 1, process A, number 2, process B, number 3, normal loss or gain, number 4, abnormal loss or gain, number 5, finished goods, and number 6, profit and loss extract.
Okay, so what I will do, I may not make the finished goods account and P&L extract. I'll do that later. Another sum I'll work out. This sum will learn how to make process accounts and then how to make abnormal loss and abnormal gain and also normal loss account. Is that fine?
Yes, sir.
Now what I will do, it's all, quite lengthy, the solution. What I will do, I will take process A first. In that, always I follow 4 steps, including preparing process A account. I follow 4 steps. If you follow these 4 steps, you cannot go wrong in the examination. Is that fine?
Yes, sir.
You can follow these steps for any sum on process costing without, whether with or without work in progress. Doesn't matter. Now, please refer to the solution out there. Yes, ma'am.
First, overhead absorption rate.
First, do that working 6,840 rupees upon 11,400 rupees into 100. That means the overheads are 60% of direct labor cost or direct wages. Is that fine?
Yes, sir.
Now, process
A.
A is a subheading. Under that, there are 4 steps, I said, right?
Yeah.
I will discuss the first 3 steps. Then you pause the recording and take down the solution till that. Then I'll discuss the 4th step, preparing the process A account. Is that fine?
Yes, sir.
Under process A, step number 1 is,
Determination of output and losses.
this is going to be only in units. It is a working note that will show all the quantities. That is a determination of output and losses. Under that, the first point will be expected output. 2000 kilograms input into the process material given into 80 by 100, which is equal to 1600 kilograms. That is the output you can expect given the normal yield 80%, right?
Yes, sir.
And then second point is normal loss units. Is it clear?
Yeah.
It is 2000 kilograms into 20%
20%.
normal loss, which is 400 kilograms. And then third point is the actual output given in the question for process A. It is 1400 kilograms. Now, how to find abnormal loss again? The best approach will be you compare the first point with the third point. What is the expected output? 1600 kilograms. And what is the actual output? Is 1400. You got something less than what you expected, like how you expected marks so much, you got something less. It is an abnormal loss, or I never expected such low marks. Okay. Unexpected loss or abnormal loss, how many kilograms?
200.
200 kgs. There is another way to understand 200, I'll tell you how. Now tell me, 2000 kilograms were introduced into the process, right? And what is the actual output? 1400. That means what? You actually lost 600 kilograms. But what is the expected loss, normal loss? Only 400. Actual loss is 600. How? 2000 input minus 1400 output. 600 is the actual loss. But what is the expected loss? 400 kilograms. Therefore, the loss in excess of normal is abnormal loss. 200 kilograms. Is that fine?
Yes, sir.
That is step 1. Step 2, it is a determination of cost per unit of output. I need this number, most important number. Okay. Now just see, first item is what? The input,
Material.
which is 2000 into 5, 10,000 rupees.
Hmm.
Direct labor 7,200. Process plant time cost, it is 8,400.
400.
And overheads will be 60% of 7,200, 4,320. From this, you are supposed to minus a normal loss value. We always know that the cost will be borne by the good units, right? So minus a normal loss value. Here in this sum, normal loss has a value.
Yeah.
Now we know that our 400 kilograms normal loss. Okay, that into 0.5 per kg scrap value. How much? 200 rupees you subtract. And what is the net cost?
29,720.
That is the net cost to be borne by the good units, which is good units that is
1,600.
expected, which is by 1,600 kilograms. How much you get?
18.57.
Rupees 18.575 per kg. And that is a cost per kg. Now step 3, you see, I will value the, what is that? The cost of output and also the losses, right?
Yes.
Under that, we know that actual output is 1,400 kilograms in process A, actual output. That into rupees 18.575 per kg. How much you get?
We get 600 points.
No, 1,400 kilograms into rupees 18.575.
It is
is
26,005.
26,005 rupees. Guys, use your calculator. 26,005.
5.
Then, what is the cost of abnormal loss? It will be 200 kilograms into 18.575. How much? Around 3,000.
3,715.
715 is your abnormal loss at cost. People ask me, sir, what do I do with that? Abnormal loss will be later taken to costing P&L, remember. But abnormal loss, the cost of abnormal loss units, what you lost, will be taken to profit and loss account. Is that clear?
Yes, sir.
Please remember, in step 2, don't make this mistake. Okay, go to step 2 once again. Don't divide 29,000 how much?
720.
By actual output. If I do that, I'll be inflating the cost per kg. That means what? I am passing on even abnormal loss to the customers. That is unfair. That is why we divide by expected output. And we have done that concept earlier.
Yes.
Where normal loss will be borne by the good units. Understood? Now, step 3 is over. Step 3 is what? Determination of the cost of output and losses. So, what is the actual output? 1,400 kilograms into 18.575.
26,005.
And abnormal loss 200 kilograms into 18.575.
3,750.
If we add these two numbers, it's only a cross check, okay? If we add these two numbers, if we add 26,005 and 3,715, you will get an amount what you got in step 2, the total 29,720. You will get that. It's a cross check. Basically, out of 29,720 cost incurred, 26,005 is a cost incurred on good output, and the 3,715 is a cost incurred on abnormal loss, which is a bad output. Is that fine?
Yes.
Guys, complete steps 1, 2, 3. Then I will teach you how to make the process account. That's a very easy task. Okay. First, complete these 3 steps.
Yes, sir.
Okay. Now we shall go ahead and take on process A account. A T-shape account, that is on the debit side, particulars, units, that is quantity and amount. And on the credit side as well, particulars, units and amount. And this account, what you should do, debit all the expenses. Just see on the debit side to input material. Under units are 2000 kilograms. But remember, units is only memorandum column. So 2000 memorandum means just a rough column just to keep track of the quantity. So 2000 kilograms and amount is 10,000 rupees. And then to direct labor or wages, it is 7,200 rupees. And then to process plant time cost, don't any hours under units, okay? And amount is rupees 8,400. And then to overheads, rupees 4,320. Till that is fine. You start debiting all the expenses, fine. Then how do you account for abnormal loss? The entry will be normal loss account debit. You debit all losses to process account. In the account on the credit side, by normal loss, it is 400 kilograms and show the scrap value which is an income, right? So rupees 200 on the credit side. As good as minusing from the cost. Don't show 200 in brackets, nothing, 200 rupees, right?
Yes, sir.
Then, what is the entry of abnormal loss? Abnormal loss account debit to process account. Later, profit and loss account debit to abnormal loss transferred. That's later. So, by abnormal loss account, we know it's 200 kilograms and the value is 3,715. What you got in step number 3,
yes,
that number will be written. And finally, what is the entry for actual output? Remember, we know that the actual output is 1,400 kilograms from process A. Is going away from process A and going into process B, right? You can say debit what? Debit process B, debit the receiving process, and credit the supplying process to process A. Debit the receiver, credit the giver. Understand that way. Process B account debit to process A. So in process A, by process B account hyphen transfer, it is transferred out of process A and transferred into process B. Got it? So by process A, by process B account transfer, under units, no doubt, 1,400 actual output, and amount what you got in step number 3, 26,005. After placing this, your account will tally. How many kilograms? 2,000 kilograms, both the sides. Yes, or no?
Yes, sir.
And what is the total value?
29,920.
That is all. 29,920 is the total amount. But the two important numbers on the credit side are by abnormal loss and by process B transfer. Is that clear?
Yes, sir.
Now guys, go ahead and complete
Process A account.
process A account.
Yes, sir.
Okay, now let us go ahead and take on process B. Again, I'll discuss the first 3 steps, okay? And then we shall take on process B account. Now, refer to step number 1, determination of output and losses. Under that, the first point is expected output. Nothing but take the input. We know that 1,400 kilograms are coming from process A. Remember? In process A, we wrote by process B. That is an input. And also, another 1,400 kilograms are introduced in process B directly at rupees 12 per kg, given in the question, right? So, add both.
2,800.
In all, 2,800 kilograms into 90 by 100 is a expected output.
2,520 kilograms.
Is a expected output. Normal loss will be 2,800 kilograms into 10 by 100. Normal loss, 10%, which is
240 kilograms.
280.
Sorry, 80 kilograms.
280 is a normal loss. And actual output is given is 2,620 kilograms. Therefore, please remember, compare point 1 and point 3. Expected 2,520, but you got 2,620. You got 100 kilograms more than expected. Like you expected 60 marks in examination. You thought 40 marks will be lost, but you actually got 65 marks. That means you gain 5 marks extra. That means your normal loss, basically actual loss only 35, right? In our example, that is marks. Like that, expected is 2,520, but you received a 2,620 actual output. Therefore, abnormal gain of 100 kilograms. And there is another way to understand abnormal gain. I'll tell you how. Now tell me 2,800 introduced and we got 2,620 actual output. That means 180 kilograms are actually lost. But what was your expected loss?
280.
280. You lost something less than what you expected. So 100 kilograms is an abnormal gain. Is that clear?
Yes.
Got it? Then step number 2, no change in determining the cost per unit of output. Very simple. First, I'll take from process A cost. We got 26,005. That becomes an input. The process A output becomes process B input plus further input 1,400 kilograms at rupees 12 per kg, 16,800. And direct labor cost or wages 4,200. And then process plant time, it is 80 hours into rupees 72.5. How much?
5,800.
5,800. And then overheads will be 60% of 4,200, 2,520.
520.
Now minus the normal loss value, that won't change. It is a 280 kilogram normal loss into 1.825. How much?
511.
You minus 511, you get a net cost.
54,814.
Now divide that by 2,520 kilograms of expected output. I'll get the cost per kg, but it won't be a neat number. It will be
7515.
21.75 blah blah, right? 4 decimals have been taken. It goes on. That is a cost per unit of output. Now go to step 3. Now I am supposed to value both output and also the abnormal gain. Both I should value. Please remember, both will be valued at cost. Over here, just see. We know 2,620 kilograms actual output. That into rupees 21.75 blah blah. How much you get?
56,989.15.
Or you can take it as what? 56,989 if you want to. Okay, 989. And what is your abnormal gain? See, I'll say negative cost. I will use the word what?
Negative
cost of abnormal gain because it is a gain, not a cost, negative cost. Got it? So, which is 100 kilograms into 21.75 blah blah. How much you get?
2,175.15.
Or you get a 2,175 can be taken, so that you can cross check also your answer. Guys, take a calculator. 56,000
989.
989 minus 2,175. How much you get?
54,814.
14, that's what you got, right?
Yeah.
The net cost. So have it as 56,989 and 2,175 is a negative cost. Why negative cost? Because abnormal gain will be taken to P&L, credit side. What is the entry? Process account debit to abnormal gain account, then abnormal gain to P&L.
Yes, sir.
It's a gain. Okay. Process account to abnormal gain credit, and credit means what? The abnormal gain account is credited, right? And abnormal gain to P&L. Got it?
Yes, sir.
So a negative cost of abnormal gain. That is all. So complete step number 1, 2 and 3.
Yes. Yes, sir.
Now let us discuss process B account, again T shape. On the debit side, particulars, units, amount, credit side, particulars, units, amount. The first will be to process A, what is coming?
Yes, sir.
It is 1,400 kilograms and amount is 26,005. And then to input material 1,400 kilograms, amount 16,800. To direct wages or labor cost is 4,200. To process plant time cost, the amount is 5,800. And then to overheads
2,520.
2,520. And now record the normal loss. You know the entry. Normal loss account debit to process account. So by normal loss, it is 280 kilograms. That into 1.825 is 511, right? 511.
Yeah.
And for abnormal gain, what is the entry? Process account debit to abnormal gain. The later abnormal gain to P&L credit later. But here to abnormal gain account under
units
100 kilograms, no doubt, amount is 2175. Then finally on the credit side, you can write a buy finished goods account. That is transferred from process B to the warehouse. Then it will be finished goods account debit. It will increase the finished goods in the warehouse debit asset to process B account credit the giver. So in process account buy
finished goods.
Finished goods account. Okay, the quantity 2,620 kilograms and amount is 56,989 rupees, right?
Yes, sir.
So then you total the units and amount, it should tally. That is all. Is that fine?
Yes, sir.
Complete process B account. Then we will discuss abnormal loss, abnormal gain and normal loss account attested. Okay?
Yes, sir.
Yes.
Yes, sir.
Now let's go ahead and discuss abnormal loss account, abnormal gain account and normal loss account. Then you can pause the recording and jot down all the three, right?
Yes, sir.
Now please refer to abnormal loss. We know that abnormal loss nothing but the loss in excess of normal, right? Even these units are scrapped, but not, it wasn't expected. Refer to abnormal loss account. In that we write on the debit side under particulars to process A account. Because in your process A account we wrote by abnormal loss.
Yes.
So to process A under units 200 kilograms and amount is rupees 3715. That is a cost of goods lost. But please remember, whether it is normal or abnormal, these are scrapped units. Will be sold at 0.5 per kg. Don't understand only normal loss can be sold, right? There is a loss which is not expected. But what they meant in the question, normal loss, the loss represents contaminated material which can be sold. So on the credit side, by bank, the entry is bank account debit to abnormal loss. So by bank account, you receive the money immediately. 200 kilograms will be sold at 0.5, how much?
100.
Rupees 100 recovered. That means what? Out of 3715, the cost of abnormal loss, rupees 100 is recovered. So 3615 is a cost which could not be recovered, and that will be transferred to P&L. What is the entry? Profit and loss account debit. What P&L? Costing profit and loss account debit to abnormal loss account. By costing P&L is a balancing figure, rupees 3615 under amount column. Now total quantity 200 kilograms and amount is 3715 rupees. Is that fine?
Yes.
That is abnormal loss account. Let me go to abnormal gain account. Just see. First on the credit side, by process B account. Remember, in process B we wrote to abnormal gain.
Yeah.
So by process B account, it is 100 kilograms and amount is 2,175. People say, sir, should I write to bank? No, don't write to bank. You should write to normal loss account. There will be 100 kilograms into 1.825, the scrap value 1,182.5. So why is a normal loss? I'll tell you. Can we go back to process B on the screen, Renuka?
Yes, sir.
Go to process B.
Account.
Remember in that account, process B account, we wrote by normal loss, we wrote
280.
We wrote 280 kilograms into 1.825, right? Now just see the process B account. On the debit side, what are the two inputs? 1,400
And
1,000 in all 2,800. Just see the credit side. Buy finished goods, what is the actual output? 2620. Difference will be 180 kilograms. Yes or no? 2,800 kilograms were introduced into the process and the actual output is 2,620, means 180 is the actual loss. Yes or no?
Yes, sir.
But how much is shown by normal loss?
280.
100 extra. So the normal loss should be what? Offset or set off. The normal loss should be offset. So what you should do? The normal loss is overstated. Yes or no? So cancel it. So when the normal loss units are overstated, even the value is overstated. The 511 includes the 100 kilograms extra into 1.825, right?
Yes, sir.
I repeat myself. There see process B account. On the debit side, there are two inputs. From process A, 1,400 kilograms. Look at the units column. And direct input, 1,400 kilograms. In all, 2,800 kilograms are processed. And what is the actual output? 2,620 by finished goods. So what is the actual loss? Only 180 kilograms. Yes or no?
Yes, sir.
But how much have you shown as by normal loss?
280.
You have shown 280 kilograms into 1.825, right? 511. Therefore, 100 kilograms into 1.825 should be set off, should be removed. That's why just see, to normal loss account, 100 kilograms into 1.825, 182.5. Now the balance will be transferred to costing PL. That's a real gain. To costing profit and loss account.
1,992.5.
That is all. Then finally, prepare the normal loss account. On the debit side, have they done?
Yeah.
So on the debit side, to process A, 400 kilograms, amount 200. Then to process B, 280, which is actually overstated, right? 280 kilograms
511.
into 1.825, 511. But on the credit side, by abnormal
Loss.
gain account. By abnormal,
Gain.
they wrote gain.
No, abnormal only I can give. Gain, I'll write it.
Please write by abnormal gain account, because in gain account, two normal loss. By abnormal gain, 100 kilograms
182.
into 1.825 over 182.5 is removed.
Yes.
Then finally, by bank account, that is amount realized from the sale of normal loss units.
528.5.
Quantity balancing figure.
580.
580 kilograms lost, normal loss, and amount balancing figure. Is that fine?
Yes, sir.
These are the three accounts you can make: abnormal loss, abnormal gain, and the normal loss account. But I want people to focus on abnormal gain account. On the debit side, don't write to bank, to normal loss account. Why? Because to the extent of abnormal gain, 100 kilograms, your normal loss is overstated, which has to be set off, right?
Yes.
So that's why to normal loss account. So guys, now pause the recording and jot down these three accounts in your notebook. And with that, we complete this example.